Chief Financial Officer services are a very important component of accountants evaluating the additional services that can be offered to clients. The Deloitte report on digital disruption has really raised some issues for a number of businesses to think about, but today we're thinking about an accountancy business. And what are the additional services that you could supply to your clients? Deloitte are forecasting a 32% change, which they indicate is basically occurring now, because it's just not going to suddenly happen in 2.5 years' time. One of the new services that you could introduce to support your clients is this one we are talking about today. And basically, Chief Financial Officer might be a fancy title. It could just as easily be accountant or chief accountant. But what I'm trying to convey is that the accounting team within your firm would be offering a service as an in-house accountant for your client. And what are some of those services that you might attend to? We envisage with all of these business advisory services that you will have had a one-on-one meeting with your client. This would probably have originated from a seminar that you've presented, because that's part of our recommendation to market business advisory services to your clients, that you have a seminar with them, preferably no more than 20 clients at a time, because you need to be able to work the room with your clients, and you need to be able to immediately start to deliver the product if 20 or 30% of the attendees decide to immediately give you some work. So following the seminar, we're suggesting that you then follow up your clients and arrange to have a personal one-on-one meeting with them. Maybe a 2-hour session, and our recommendation is you would not charge for this. The purpose of the meeting is to assist the client to identify the additional services that they might like you to provide. You need to bear in mind that survey after survey, and obviously the most recent one has been CCH, which finalised their survey in April this year, have identified a range of services that small, medium enterprises are asking their accountants to supply to them. And the real risk that everyone has got at present is that some firms will be implementing these new services very quickly, others will hesitate, and they will find that either other accountants or consultants have started offering these services to clients. So one of the ways that we are suggesting to have the conversation with a client is to use a document we've called the SME Needs Analysis, and I'll show you a section of that shortly when we go onto the website. And using the SME Needs Analysis is a bit like using a menu in a restaurant. It will supply a full list of the products and services that you can offer. One of these will be Chief Financial Officer services. And then you will be able to submit a written proposal to the client, which we'll talk about a little bit later, whereby you confirm the range of services you might be able to supply. Now, what are some of the services that come under this heading that we're calling Chief Financial Officers? I believe that every business, no matter how small it is, has a requirement for a CFO or an accountant at least some part of every week. Or if not every week, at least every month. Now obviously the requirements are going to vary depending on the size of the business and the complexity of the business. But accountants, in my opinion, need to be promoting the concept to the clients that you can offer a far wider range of services than taxation. And unfortunately, many of you have not done that over the years. And clients, whilst they're nominating that accountants are their most trusted advisor, but they're also nominating that they require a wider range of services. And we're all hearing stories starting to filter through that some of these clients have obviously given up waiting for the accountant to come and talk to them and say, we can offer you these services. Some of them are starting to go off and talk to business consultants, coaches, some of whom are very good, some of whom are very competent, some of whom are accountants. But obviously there are a fair number of them who are not competent in this area, in this financial management space, to be giving advice to clients. And clients seem to be quite happy to pay fairly large fees for some of these services, products and services that I believe accountants should have been able to deliver. So what are some of the jobs that you might like to look at? Well, they could include working capital components. I believe that this is the biggest single area confronting small business operators. Their debtors, their stock, their work in progress, the pressure they're getting from their bank on their loans, hire purchase, leases, abiding by the bank's covenants. There was an article recently where banks, or some banks, are indicating that they're having a closer look at their covenants. I believe that if you're offering a service as being the accountant for a client, you should know what the bank's covenants are. And they might be that they require financial accounts by 60 days of the end of the financial year. It might be that there's certain ratios that are required to be met. Is anyone monitoring those? Is anyone looking at them and saying to the client, gee, you know, it's 53 days since the end of the year, we've got to get these financial accounts in? And that's about what it is today, isn't it? 51 days, I think, quick mathematics, from the end of the financial year. How many of your clients have got part of the agreement with their bank which said by the 31st of August the bank is supposed to receive financial accounts? I honestly believe you need to be aware of that. Banks are starting to get a bit toey. The politicians and the government might claim that everything's going well in Australia, that's why we got low interest rates, but I'm sure you all know that that's not the case. And the Reserve Bank's been trying to tell the politicians that. The economy is in some difficulties. Banks are getting nervous about it, and therefore I believe we're going to see more reliance by banks on their agreements, on their covenants, and you could have some clients who are going to face some difficulties. So what about monitoring key performance indicators? Setting up appropriate KPIs for your client. Now in our material within ESS BizTools, we've literally got 40 or 50 different sort of KPIs. If you look at the various industries, more than that. But your average business doesn't need 40 to 50. They're there for you to make a selection of the type of KPIs that you think fits that particular client's requirements. But most of your clients will need advice, because if you were the internal accountant, you would be establishing those KPIs and then making sure they were being prepared. Now some of them might be getting prepared daily, weekly, monthly, or other periodic times. How in-depth are the monthly financial accounts being analysed? Is there an analysis being done of individual jobs if it's a manufacturing type business, to understand how the business performed compared to the original gross profit projection? What comparisons have been done between actuals and budgets? A lot of businesses rush out and prepare budgets and cash flow forecasts at the beginning of the financial year. But are they being used as a management tool? If you were working full-time for a client that was preparing budgets and cash flows, wouldn't you be monitoring the performance during the year and perhaps preparing some amended budgets and cash flow forecasts? Wouldn't you be suggesting to the CEO that there should be a discussion with your bank about various components of those forecasts so that you can ensure that the business is not going to have problems? My concern is that some accountants are preparing budgets and cash flows. My bigger concern is a lot of accountants are not preparing any of this. But even when they're prepared, they shouldn't then be thrown in the bottom drawer. They should be living documents, documents that are being used to guide the CEO, the owner of the business. So what's going on? What trends need to be looked at more closely? Work on projects is another key area that accountants working as CFOs could do. To really analyse the feasibility study before the owner goes out and spends a couple $100,000 on a project. Has a proper analysis being prepared? What about insurance reviews? Some of your clients leave their insurance reviews to their insurance company. I don't think that's good enough. Needs to be a proper review, especially on things like consequential loss of profits insurance. How long since you reviewed that with your clients? The number of key employees may have changed. Is the period for reinstatement reasonable, taking into account how long it might take a council to approve a new building to be built, and how quick would the building be built? I've seen some of these consequential loss of profits policies which talk about reinstatement within 3 months. I don't think that's realistic. And you could have a client that's in enormous difficulties because they're claiming on one of these policies and find that it is a totally inadequate cover. Company secretarial duties. What about grants? Now ESS has another product, ESS Biz Grants, which we developed to assist accountants to identify government grants. And we've had some take up, a couple of hundred firms around Australia, a couple of hundred firms out of 7,000 or 8,000. We're not happy with that, but many accountants are obviously deciding government grants is not part of their responsibilities. Well, one of the reasons we wrote ESS Biz Grants was that David Smith from Smith Inc. was undertaking reviews for a consolidator, and those reviews included talking to a lot of small businesses. And David Smith said to me, small businesses are complaining time after time about not being alerted by their accountants about government grants. So it's my observation that whether the accountancy industry as such accepts that grants are part of its responsibility, many of your clients do. And I think getting into government grants is an easy way to start offering a wider range of services in any case. And you could coordinate the applications, and some of the work is work that you could probably do within your organisation, like budgets, cash flows, business plans, reorganising the debtors system, etc. Are your clients exporters or importers? What about the currency? There's been some real changes over the last 3 months, hasn't there? We sat above $1 versus the US dollar for months. Now suddenly it's down, 92. It's down against the English pound. What effect is this having on your business? What about benchmarking? Now benchmarking has come a long way since FMRC at Armidale started it 35, 40 years ago. But there is now some very sophisticated benchmarking information available. The ATO's got it. Are you using it to make sure that your clients have a guide as to how their peers in their industries are going? What about evaluation of the business? The business is growing and wanting to achieve something. The conversation when you work through the SME needs analysis may well identify that the client would like to sell this business. And the next question should be, well, what do you think the business is worth? And the client will undoubtedly name a figure. It'd be very interesting what you would value the business at. And is there a valuation gap? Is the client in the belief that his business is worth $2 million and you believe it's worth $900,000? There's a gap of $1.1 million. Can't you develop a strategy then to assist the client and his management team to bridge that gap over the next 1, 2, 3 years, and then be part of the team that's going to fulfill that? That's Chief Financial Officer's duties. Also, we've listed their capital expenditure. And intellectual property records. I've just got off the phone to a intellectual property lawyer for one of my consulting clients, because this venture has used some software that's been developed by one of the directors in their new product. And the directors of the new product company would like to sell that technology and the whole company in the next 2 to 3 years. And one of the due diligence issues I've been raising with them is we need to sort out this intellectual property that's owned by one of the directors that with all their knowledge has been used in their new product. There needs to be an appropriate agreement to protect the company, to protect him, and to record when everyone is friendly and happy what the deal is. The lawyer said to me, geez, I wish everyone would give their clients this sort of advice, because she said, I normally see the problem when it all erupts in 3 or 4 years' time. Someone claims that company A didn't have the right to be using that technology, or the original inventor now wants to change the deal. All sorts of legal issues can arise. So they're a snapshot of some of the things that I think chief financial officers can be doing. Also, research and development. How well is that documented? If their client's an exporter, are they adequately claiming the export market development grant? And what about helping the client to develop some specialist industry seminars for the industry they're in, or indeed helping them make presentations to their customers? And one of the big issues in all this is regular client visits. It never ceases to amaze me the number of accountants that tell me they haven't been to a particular client's premises. And my suggestion is, get in your car and go out there and visit the premises. Understand the physical conditions that your client's team are working in. Have a sit down and have a cup of tea or a coffee and talk to your client. The client feels more comfortable in their own premises. And my experience has been that invariably I come away from a client's premises with more work to do. But when they've got to come to your office, and invariably they're worrying about parking meters, they're in unfamiliar territory, they know you're on a strict timetable limit. You're probably on that when you go to visit them in their premises as well, but they feel more in command, and I think they're more likely to be forthcoming in talking about work to you. So in our material, we've also analysed the duties of a chief financial officer in a public company. I studied the Financial Review for a couple of months, mainly on a Friday. It's quite interesting if you cut out the advertisements for Chief Financial Officer, Finance Director, Accountant, Chief Accountant, and then look at it and say, does some of this work have to be done by small businesses? I really suggest to you a fair bit of it does. So we have a document here, which we're going to go on to shortly, which will show you the type of services that I believe that are very well summarized in the advertisements for chief financial officers, many of which are services that you could think about. And indeed, we have a checklist for you to sit down and have that conversation with your client and say, do you need assistance in these areas? Now, some of these things, of course, are going to be for the upward mobile companies, the ones that are currently on 2 million turnover, that have a dream of having a 5 million turnover in the next couple of years, or the ones even on 5 million at present that want to get to 15 million, that want to grow. Many of them are trying to make themselves attractive for larger organizations to buy them. Some of them may even want to do IPOs, initial public offerings. So there's some of the services. And we believe that these services, of being a chief financial officer, you should be able to offer to all of your A-class clients and some of your B-class, especially the ones that you believe can become A-class within the next 12 months. So we might leave the webinar, the PowerPoints there, and we'll go on to the paper itself. Now, we're now on the website, so if you go to our website and look into the Business Advisory Services modules, it is this paper which is the key driver of Chief Financial Officer Services. And the narration there is an article written targeted at the accountant, giving you some ideas on the sort of things that you should be looking at to offer a Chief Financial Officer service to your client. What I'm going to move into, though, is looking at some of the forms, because these are the things you might use. In the beginning, as part of getting yourself prepared getting your mindset right, because to offer a Chief Financial Officer service, you have to be thinking as the accountant for a business. And your team has to think that way. This is not just an annual tax return job that you might be doing 3, 6, 8 months after the end of the financial year. This is a job that you're in the scene, in the game today, for decisions being made today. So there's some predictions here within this, what I believe is going to happen to the Australian and New Zealand accounting profession over the next 3 years. A lot of it is linked now to what Deloitte's are forecasting in their digital disruption, but also what CCH identified in their survey of small businesses. So you could read that at your leisure. We've also produced a vision statement for the accountancy profession, which is a worksheet to help you to identify the type of services that you're already providing. Now, some of you will already be providing business advisory services, but you're probably not calling them that, and you may not be invoicing them and that with your client. But we have a long list there of some of the sorts of services that you might be already supplying, and perhaps that list will give you an idea of some of the other services that you could be offering to your clients. And we're also raising a question there about marketing. From the discussions I've had and my observation of the accountancy profession, I believe most of the accounting firms, indeed the accounting firms who really embrace business advisory services, will be employing marketing officers over the next 2.5 years. The marketing people will work in-house to help you market your services, because you're going to have to market your services. You cannot assume that your clients are automatically waiting for you to come and talk to them about business advisory services, because you need to sell them on the concept that you're prepared, that you're able to do this. The clients through the surveys are saying they want these services offered to them, but they want to know that you're prepared to do it. So we imagine you're going to need a marketing person, and that person will also be able to do some client work. And with some of the government programs that are around at present, having a marketing person in-house will greatly assist you in being able to offer that broader range of services to your clients. The SME needs analysis is a document that allows you to review your current business performance. Now, this is a document that I'm suggesting you would give to your client so you can have the conversation with the client, and the client can comment on some of these things. Client might raise questions about what's debtors finance and factoring, and you might find that they're eligible to go and talk to a bank or a specialist company to be able to avail themselves of some finance on their debtors ledger. But there might be some other areas that this review opens up. It might be in human resources. It might be in government grants. It might be in having a role of monitoring their competitors. And I think always you should be exploring with the owner how they're recharging the batteries. What's their aim in life? Are they having holidays? Are they working too many hours? They're working in the business all the time. Taxation planning, huge issue, should be considered. But then we get into future planning. Now, a lot of this then fits into what we're calling Chief Financial Officer services. Some of it you may do individually, but others by raising the question with your client in the conversation, the client may well be identifying that's what they want you to do. And we'll move on now to the next item. Now, we've developed a initial Chief Financial Officer service. This might be when you're talking to the client, you're able to be using this form in very specifically way to be saying, well, do you want us to be handling this type of activity each month. So there's many things there that hopefully is going to alert you to some of the services that you might be able to offer. Now, we have developed some packages here that, sorry, I hit the wrong one then. We've developed some packages here that you might want to include. So we've included what we call a gold package of bundled services. Now this includes your compliance work, but it's some of the other activities that you might care to discuss with the client and say, well, this is what we will do. Is this the sort of work? So perhaps a sheet like that might help you in identifying the work offering that you would do with your client. Now, that was a fairly extensive package. Then you might offer them us, if you need to, say, well, we could do a silver package, which is not quite as extensive as what the gold package was. You're not getting quite the amount of services. And we also have a bronze package there, which hopefully will help you. We've developed a chart to help you in determining the services to be offered. We've called it the workflow process for business advisory services checklist. There's 25 steps which takes you through the process of getting ready to start to deliver some of these services. One of your problems might be cash flow cycle. So with your client. So if they're a retailer, there's a worksheet there which will allow you to plot what happens in this client's business. When do they receive stock? When do they pay for it? When do they normally sell it? When's the customer pay? How many days have they got in a cash flow lockup? My experience, a lot of businesses don't really understand this. So we got that. It's a form you might care to use. Then we have a form which will help hopefully with manufacturers understanding what's going on in their business. Because besides stock and materials, they've also got wages, which they're probably paying every week or fortnight, which is a cash payment, of course. And they're then giving credit to their customers. So how long are they tying up money in their business? And what you might be able to find from doing this sort of analysis with your clients is some areas where you could offer advice on how this cash lockup can be reduced. And what's on the screen there at present is for a professional firm. And you all know about how long money can be tied up in your work in progress and debtors systems. Well, the same thing's happening for engineers and architects and solicitors. There's a sales funnel calculation sheet to help your client to understand if they want to achieve a targeted sales figure, how many introductions or contacts are they going to need? How many proposals do they need to submit? What sort of conversion are they getting? And the orders they receive, so that they can work backwards. Insert their budgeted sales, their average sales. Based on that, how many sales contacts do they need to make? What is their normal conversion? If they're only getting a conversion of 25%, they're going to be making a lot of proposals. So that there can be some understanding of the process. And out of this, you could be making improvements. If you're working full-time as an accountant in some of your client organizations, this is the sort of work that you'd be getting involved in. So why don't accountancy firms deliver it to their clients? I mentioned before identifying key performance indicators. Well, we've got a list here of some of the KPIs that you might care to have a discussion with your client about to make sure they're getting them. There's nothing too complicated in any of these KPIs, but they might be able to be used by you in identifying KPIs that your client should be looking at. What sort of bank covenants are banks likely to have? And have you had a look at this? Interest times covered is one of the bank's common ones, but net profit to sales, current ratios, quick ratios, debtor ratio to borrowed funds. If you go through your client's bank agreements, you'll find these types of covenants are included. And a lot of businesses take no notice of them, and I doubt whether too many accountancy firms really know about what their clients have signed on for. But if you're offering a chief financial officer services, you need to know that. And it's a service that you can be identifying to your client that you're going to perform to assist them in undertaking these duties. We have a debtors days outstanding calculator, which is also included in our debtors management section. But this is a document which first of all will show the client how to calculate debtors days outstanding, and then there's an example. Well, there is an example of how to calculate it, so they can then do it themselves. But it might also be part of what the CFO role that you're taking on. And we have a debtors reduction checklist, which hopefully will assist the client to identify key debtors that they need to get substantial money from. The calculation may have been done that on debtors days outstanding they're sitting on 58 days. They're worse than the national average, 55, which is shocking in any case. But they've decided they want to get back down to 40 days, and they won't do that unless there's a plan. Who are they going to go and talk to and get some big money from? So list their names, list the targeted amount they need, 10 grand, 20 grand, 25 grand from various clients. Who's allocated to go and do that? It might be you as the CFO, of course. Preferably not. Hopefully you can get someone else to do it, but it needs to be identified who's going to go and collect the money, and then there's a sheet there to progressively record what is being received from each of those people. Within the material there is a form to assist you in the preparation of budgets for offering these services, so you can prepare a quotation. And we've listed some of the duties that you might care to undertake, and obviously if there's others you would have to add them, and you've got to supply your estimate of the hours that these services will be provided for. Now, to give you an idea, and I'm sure you know because I'm sure you've all come across work that's been handled by business consultants, business coaches. They seem to have a standard figure of a minimum of $2,000 per month to be charging to clients to offer a coaching service. And they turn up for a few hours and probably make a few phone calls. But fees of $30,000, $40,000 are not unusual depending on the complexity and the type of work that you're undertaking. But hopefully this format will help you identify the services you might be able to do for the client, and you can put down your estimate of hours so you can come up with an overall figure to tell the client that's what this annual service will cost them. And you can then work out what the monthly payment's going to be. That's my suggestion on how you do this. You establish a fee of $30,000 and it's $2,500 per month for that service. And also included in the material and obviously I closed down the wrong thing then, my apologies. Obviously included in the material is the a proposal form, engagement letter. Our suggestion is that any of these business advisory services engagements should be in writing, so there's a clear summary being given to the client as to what you are going to do. Obviously you would edit this if you were not going to handle some of these jobs. You can prepare your own if you wish, but our strong recommendation is you have something that you give the client. It's not a verbal or a handshake. And you spell out your payment terms. You also make sure you're covering yourself on unanticipated services. It might be an audit by the tax office. It might be something else that you haven't included in the agreement, so that you're then able to submit the quotation to your client. So that is the approach that we are utilizing within ESS BIZTOOLS to assist accountants to offer a Chief Financial Officer service